Fighting patterns in the fascinating world of trading can be crucial to success. The three white soldiers candlestick pattern is a compelling bullish candlestick formation that typically unfolds during a downtrend. This pattern consists of three consecutive long and bullish candlesticks, each opening higher and closing significantly higher than the previous one, visually resembling three advancing soldiers marching in unison. It conveys strength and momentum in the market, reflecting in a shift in sentiment from bearish to optimism. Traders often interpret this pattern as a signal of a potential trend reversal or a strong continuation of exciting upward trajectory, making it a valuable tool in the trader's arsenal. Spotting the three white soldiers candlestick pattern in a price chart is like identifying a trio of cheerful soldiers. This bullish candlestick formation is characterized by three consecutive white or green candles, each with an open and close higher than the previous one. Soldier 1. This soldier opens the chart with a strong bullish move, closing near its high. The second soldier picks up the pace, opening higher than the previous close and maintaining the bullish momentum by closing near its high as well. The third soldier seals the deal, opening higher once again and closing near its high. This final soldier reaffirms the trend's strength. For a confirmed three white soldiers pattern, each candle's open and close should be higher than the previous one, showcasing the bull's dominance. This formation signals a potential uptrend, making it a valuable tool in your trading arsenal. Remember, the stronger the soldiers, the closer you are to a winning battle against market volatility. The pattern will appear near the bottom, but after a change in the trend. I should also note that you should not look for this pattern in the area of high prices. The opening price of the second and third days can be anywhere within the previous body. However, it's better to see the open above the midpoint of the previous day's body. Keep in mind that the day opens for trading, some selling has to exit to open below the previous close. This suggests that a healthy rise is always accompanied by some selling. The three white soldiers pattern reduced to a very bullish long white candle line. This breakdown is a full support of the pattern, which makes confirmation unnecessary. The model will be considered stronger if the upper shadows of the candles are extremely small or completely absent. This phenomenon will be evidence of a great strength of buyers. In Japanese sources, the following representation of this model is more common. There are practically no upper shadows above the candles. In many sources, I note the following alleged fact. Candles should be preferably of medium size, since heavily stretched bodies can mean an overbought market. In my opinion, the statement is extremely doubtful, unless any trend begins with a strong momentum. In this case, the large size of the candles relative to the neighboring ones will indicate the strength of the buyers. In addition, the term overbought can be applied to markets with great reservations, more to the stock market and less to the super liquid foreign exchange market. It's easy to see that before going into continued growth, after the formation of the pattern, the price previously made a corrective move. My personal experience shows that in most cases it's worth waiting for exactly this behavior of the asset. The price going into growth immediately is extremely rare, but this also happens. Everyone should decide for themselves how to act in similar situation. I prefer to wait for the corrective movement and buy the instrument from rollback. If the price does not roll back and immediately goes into growth, I usually just keep such signals. The market is big, there is no need to hurry. There will always be good trading situation. Another small observation. After the formation of the pattern in question, very correction movement, it's very rarely beyond the low of the average candle. These observations allows you to lower the stop loss when opening a trading position. Ideally, I try to put the stop loss behind the extreme for a strong support or resistance level. Let's take the USD GPI pair as an example. After a period of decline on day 1, this triumphant trio signals a potential trend reversal, reflecting renewed market confidence. When the three white soldiers march into our chart, it's time to consider joining their parade, potentially capitalizing on the upward momentum in the market. These three bullish candlesticks resemble a trio of soldiers marching in harmony, signaling a potential reversal in your favor. Finding entry points. Spotting the soldiers. First, identify the three white soldiers pattern, which consists of three consecutive strong bullish candlesticks. These candlesticks should open near the previous close and close higher, forming a stair-step pattern on the chart. Confirm with volume. Ensuring the pattern is backed by significant trading volume, as this indicates the strength of the trend reversal. The more soldiers marching together, the stronger the signal, and of course, wait for the first soldier. With its higher close, it's confirmation you needed to enter the trade. A robust first solder indicates a higher likelihood of sustained upturn. Just as a successful journey may involve regular breaks, consider taking profits of predefined levels, or when the trade shows signs of exhaustion, aiming for 2-1 risk-to-reward ratio can be a smart approach. Think of trailing stops as your compass to navigate through the forest. Move your stop-loss order to lock in profits as the trend progresses. This way you can capture more gains if the trend continues and protect your capital if it's reverts. Three white soldiers and three black crows are opposite candlestick patterns in trading. Three white soldiers show three bullish candles opening higher than the previous, indicating potential uptrend. Conversely, three black crows consist of three bearish candles opening lower, signaling a potential downtrend. However, like any trading pattern, it has its limitations and should be approached with caution. Relying solely on the three white soldiers pattern without considering other factors can be like driving with blinders on. It might overlook critical market conditions or fundamental analysis, leading to misinterpretation. Not every appearance of the three white soldiers pattern guarantees a strong upward trend. False signals can occur, resulting in losses if traders act solely based on this pattern. High market volatility can distort the effectiveness of this pattern. Rapid price swings may invalidate the pattern's bullish signals, causing confusion and potential losses. To increase readability, traders often seek additional confirmation through other technical indicators or chart patterns. That's it. I hope you liked this video. Goodbye, subscribe to the channel, and just stay tuned.